We helped a client make over 800,000 in just a few months on this portfolio, but it still have some weaknesses which we are about to fix before adding an investment of 2 million on top of it. Even if you see this portfolio being so positive and it has big income, it still have some weaknesses, of which it has some weaknesses and some benefits, which is the strengths. That's why it's in profit. I'll be fixing the weaknesses with you. I'll be sharing the weaknesses and the strengths of such a portfolio so that you can try to evaluate with yours. I will start by weaknesses and then I will finalize with the strengths. So when we come to the weaknesses, this portfolio is over concentrated on one company. One company carries almost 62% of the entire portfolio, which is very risky and also a little bit beneficial. If that company rises by 10%, the entire portfolio rises very significantly. But if it drops by 10%, the investment or the portfolio suffers a lot. So that was something that we needed to fix. The second thing is excessive exposure to the banking sector. When we look at our portfolio, we have KCB and equity. When we add their percentage, that means that banking sector alone has carried 75% of the entire portfolio. That means we are depending on the interest rate cycles, we are depending on economic growth, banking regulations, and loan defaults, which is too much. It's not bad, but we have to balance so that at least we can have enough leverage when we are at the market. The third weakness is that we are missing defensive asset. What is a defensive asset? Defensive asset is the companies, mostly like the ones that are in manufacturing, the companies customer buy goods from, the company that deal with energy, infrastructure companies, like something, even if the market is not good, at least it's protecting our investment. So that was another thing that we were missing. The fourth one and the last one, Kenya Re has very small portfolio impact. When we look at it, although it's in positive, but it has 7% of the entire portfolio, which limits the growth of the portfolio. So it's all about, it's either we add on it or we remove it completely, so that when it grows, it gives the impact to the entire portfolio. That were the weaknesses the portfolio only had. Let's go to the strength of the portfolio. Our point number one, excellent capital appreciation. So we can see a return of 32%, which has outperformed the inflation. It has also outperformed the many traditional saving products that we have in the market. That can be money market fund, it can be special funds, it can be balance fund. It has outperformed all of them, and bearing in mind this is a period of less than 1 year we have been in this investment, or since we made this investment. The second point is exposure to the strong Kenyan blue chip companies. What does that mean? So if we look at the companies that we invested in, we have KCB. KCB is the leading regional banking group with excellent expansion, mostly in the East Africa. The second thing is equity. Equity has shown strong retail banking, also shown growth and regional expansion, bearing in mind right now the way they are trying to expand very fast, getting those footprints. The other company is Safaricom, which has shown dominance in telecommunication, and it has also shown very high profit margins. The other one is Kenya Re, which provides insurance exposure to this portfolio. Our third strength is exposure across different sectors. So we have banking sector in the list, we have insurance sector, and we have telecommunication sector. So we have diversified across these sectors, which is a good thing. Our fourth strength is all the companies earn dividends. So apart from the 32% increment, the client has and dividends in all of these companies. And remember, we haven't included the dividend amount the client got from all these companies. So if you do the math, it has surpassed that 32% return. What usually happens is you have to understand the numbers. You have to understand the company's market valuation. You have to understand its future growth so that you can make precise decisions. So what we will be doing on this portfolio, since the client wants to invest more on it, we will balance and invest in all sectors, at least so that we can have balanced portfolio. First of all, on the amount that we're gonna be adding on this portfolio, we will add the sectors that are not yet on this portfolio. So we have something like agricultural sector and industry sector. Those two sectors are what we're gonna be including. So we're gonna do proper analysis on the companies within those two sectors. We agree on what we're gonna be investing in. And then the third thing is, since we have seen we have one sector that we had that was overexposed, we're gonna leverage on that and at least balance across companies. Even if you see it has made a lot of money, it's all about knowing that there is a risk on it. So we calculate the risk and try to balance so that if one sector is affected, our entire portfolio is not affected. If you need any knowledge or any portfolio review, you can reach out on me. We can do a proper portfolio review and see what you can do on your portfolio to make it more. Let's see what the client makes with this new deposit. Have a good one.